a sense of capital. Check, check, check. 1 2 1 2 1 2. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today is always Julian, and I'm very glad to have all of you in. Not sure if anyone is actually here, but if someone is present, feel very warmly welcomed, and of course feel free as well to use the chat functionality to go in interaction with me. Guys, it's Alfen live earnings, more or less live earnings, because they have been released roughly 18 minutes ago, and doesn't look that well. That is always already quick, how you call this, spoiler, a quick spoiler, honestly, guys. And I can tell already right now, because I want to be honest to you guys, I've just sold my complete position, and that is nothing what should now affect your decision or whatsoever. But yeah, on the first glance, numbers have been that negative. Honestly, really a bang bang, not a battery bang bang, but really a bang bang, like the title of the stream. That I've decided to. That a certain limit has crossed, let's say like this, and at least I expected that the price will drop further. That's my own expectation, and that's the reason why I decided to sell. And later on, thinking about maybe purchasing back the shares, but I assume that will not be the case, and I didn't check all the details from the earnings release right now. We will do this now together, or at least on a certain level of details, and I think then all of us are smarter afterwards. Yeah. But before we jump in, actually, guys, I should not forget it, the disclaimer, as always, in the upcoming minutes, and again, generally, that's not financial advice, consultation whatsoever, and there's no guarantee of correctness for the provided data. So make sure to do always your own research, your own due diligence, and make your own decisions, because at the end, it's your money, guys. Okay. And as well as always, I've prepared Excel sheet, and as I did it already at Timson Hurst call last week, now I already entered the data, the details in advance of starting the stream, so it's a bit more relaxed and we can focus on really what matters, and this is the valuation, the verdict of those details. Yeah. So let's go back. Oh no, that's the current stock price. We can check this in my broker. my broker account. You can see here I secured roughly 12,000 euros by selling the stock. However, we can cover this later if you're interested, but there's no need. More interesting is now the first quarter 2025 earnings update of Alfen. Alfen, you very likely know. Wait, check. I mean, provider of EV charging solutions, smart grid solutions, so substations and energy storage solutions, like mobile and stationary ones which are displayed here. So located in Europe, located in Almere, I think, in the Netherlands, and quite a nice mix, a unique mix out of different there's kind of a bug of different solutions. The quite wide product portfolio for a small player, let's say like this, with a rough yearly revenue of 500 million euros. Everything here is in Europe, because again it's located in Europe, yeah, and in a country where euros is the lead currency. Okay, guys, and here is the trading update. So let's jump right into it. And how we do this? Regularly, I completely focus on the Excel sheet, but I think here we should start with the highlights, or maybe more like lowlights, if you want to state it like this. And then we go through the 3 different major product categories, and I will cover them as well with the Excel sheet. Yeah. So first of all, We can see here the highlight, which is kind of a fail actually, of roughly 104 million revenue achieved this quarter. You can see it's lower than 1 year ago, first quarter of 2024. Compare 104 this quarter to 1 year ago, 117 million. That's not a big issue. I mean, nobody expected, I assume, or at least it was not the general consensus that they will reach it. But they definitely missed it, let's say it like this, the last year's results. And you can see here a major reason is a 27% revenue decline of their EV charger solutions, yeah, and energy storage systems. Again, energy storage systems not that disappointing and surprising with -8%, but EVs after past quarters, which at least on the first glance felt a little bit more solid, a little bit more stable in terms of sales and achievements. Now this kind of decline of -27% year on year is crazy, yeah? And definitely not good, let's say like this. Gross margin, you can see here 31 million euros or roughly 30%. Yes, again, it's lower than the third quarter 2024, but as well not that low. We will jump into the different gross margins of the product types, and not that bad in my perspective, not that bad. You can see here it's already clear. I mean, EV chargers are their high margin products, and let's say kind of high margins, depends always on which kind of sector you're focused on, but in terms of renewable energy solutions in the industrial sector, I think roughly 40% is quite high, and these are the margins for EV chargers. And when you can see here, they are not selling that much, and now only achieving, and then their high profit product is out of the game a bit, of course, and that as well impacts negatively the overall gross margin. Yeah, but at least it's positive, and at least something is left. Yeah, and the same with adjusted EBITDA. You can see 5.5 million, 5.3%, not that much, especially when you compare it to past year. But here as well, I'm at least happy that it's a positive number, nothing negative, you know. What is actually really in highlight, and we will focus this later on as well, is that they really, I mean, they have this cost cut program. So they're cutting the costs, they're saving money. Lower spend for staff members, lower number of staff members, lower in general lower costs. Yeah, very likely, I assume at least. I mean, now they're focusing a lower number of countries, and therefore they have not that many whatever marketing costs as well in those countries, exhibition costs, supplier costs, distributor costs, local partners, all of this kind of stuff, lawyers even. So they reduced all of this, and you can see there is definitely an impact on the personal and operational costs by 18.2% compared to past quarter. I mean, that is nice to see. I would love to see as well a comparison to first quarter of last year. So remove kind of a seasonality. But I think best is actually to compare it to Q4, because they just started to cut down those costs. And it's nice to see that there is kind of an effect. And I think that secured at least a bit of their EBITDA result, let's say like this. And then it already starts, you can see here, they're talking about different business lines like substations, like energy storage systems. This we will cover in a moment. And you can see here, definitely a big bummer. They expect to be at the lower range, full year range of guidance for 2025. Not a strong decreasement of them, but it is definitely lower, and that's not the story you want to hear, basically, for sure. Yeah, you can see not that strong, but for sure lower, and as well impact on the adjusted EBITDA, even though they're cutting those costs. But I think yes, because of the low results in terms of EV chargers. They can't just keep the margin guidance alive. Yeah, I need to lower this as well. Okay, guys. Now I think we talk about the solutions, or let's say we do it like this. We jump quickly into the Excel sheet what I've prepared, and you can see what have been my expectations. You can't see them. Wait, give me a moment. Yeah, now you can see them. You can see here EV chargers, so the colors are not exactly the same like in the presentation, in the earnings presentation, because they're changing it a lot, this kind of colors, and I decided to keep them as they are. However, you can see these are the actual results. I already copied and entered them into this sheet, and my original expectations for this quarter have been 37, 59 and 21 million. Yeah, so how I calculated those numbers, basically I calculated them by using the old numbers of 1 year ago and added the original expected growth development communicated by the management. You can see it here. So basically, just an example, 39 million EV chargers as target for first quarter, a result of first quarter last year, minus 5% was 37 million. Yeah. So this is how I calculated it. That was my, let's say, if we would reach those levels, those targets, I would be kind of satisfied. Not very pleased, not very happy or whatsoever, and positively surprised, but satisfied and not somehow concerned. But now you can see what happened, you know. So again, my target, my own guidance, let's say like this, was 37 million euros in EV chargers. The actual result is 29 million. Yeah, you can see those roughly 26% year-on-year decline, what was stated in the report, and so they're definitely below. You can see it here now. They covered 20% of the full year guidance. Yes, they lowered it already. I actually should lower it right now, but maybe let's see. Yeah, but I will keep it right now for the call as it is. Yeah, so you can see it's still the mid-range is 483 million euros now. Actually, the mid number is 475 million euros. Yeah, so not a strong decline, but again, it is a decline. And however, I mean, again, 37 my target, 29 the actual achievement. So I can't give anything different than negative rating. And now let's see and take a look at substations. I mean, substations is really, you can see that developed very, very reliable over the past years. Even though all the other both product lines have been challenged very strongly and struggling strongly, substations always delivered 28, 34, 42, 55. So really the reliable product line. And now actually they missed as well. And not a big miss. 59 was my target, at least 59, as you can see here. But again, it's a miss, and it's lower than past year. And I mean, really, they ramped up their new headquarter, new production facility. Really want to set a higher, at least as I understood, higher focus on substations and roll it out. And demand should look quite solid. And we will later read some reasons why that's the case. However, they missed it, and the only thing I can rate here or leave here is a negative rating as well. And now, again, a highlight, if you want to say it like this, because actually last year, first quarter, energy storage systems was 23 million euros. Now my target was 21 million, because again they calculated with minus 10% year-on-year development, so decline basically, and that would be 21 million, and they reached 21 million. Yeah, so that's actually something solid and actually not surprising, not something where I say, oh guys, let's celebrate, let's get the champagne out of the freezer, out of the fridge, and have a blast, you know. That's not the the right one, and regularly at other, let's say at other companies I would rate it negative because they just cover it very slightly. But on the other hand, I hoped that they reached this target of 21 million, but I assumed, okay, it can be very difficult because energy storage systems was at least the product type which was really confronted with bad weather conditions, with some headwind, if you want to state it like this, because of different kind of reasons. Actually, a lot of competition, development effects, postponement of project decisions by the operators, like for instance wind farm operators. So regularly I would rate it negatively, but I rate it in this case neutral. Why? Again, because I simply expected actually honestly a little bit lower than 21 million, so I'm happy with this, especially in contrast when you compare it to EV chargers and substations. And so I mean 117 million euros was my expectation, and was as well by accident actually the Q1 result of last year, but now only 104. Not nice at all. You can see year on year decline by minus 11% and straight negative, and not. I mean, we can't finish here. That would already result very likely in a negative revenue evaluation or rating. But again, they lowered the guidance. We already shared it together from their highlight sheet with which the presentation of today's earnings starts. Sorry. And you can see again, it's kind of a range, but the mid number was before 483 and now 475. And again, that's already lower than last year and the year before. And I mean, just the message is not nice. Even if it would be just 1 million euro lower. I mean, yes, it's difficult to give an outlook in this industry with this different kind of parameters like interest rate of the European Central Bank and the demand, the rollout of the automotive sector in terms of EVs, and how wind farm projects again or solar farm projects, this kind of stuff getting realized, and all of this kind of stuff has a huge impact, which is definitely difficult to predict. But they had the chance to a few times correct it somehow, and I really thought, honestly guys, they're not kind of sandbagging, but really I thought they start with kind of a low end and try to provocate the situation that they surprise with the actual results of 2025. And I think actually they did, but even though they granted a quite low outlook for the full year, they didn't cover that so far, and they needed to adjust it, and that as well, I mean, is something what I need to cover in red and in negative rating. And so overall revenue straight red, yeah guys. And now let's come to the profit side of life, basically to the bottom line. So adjusted EBITDA, you can see it here. And again, full year expected originally it was 8%, I think. So it would be, I need to copy this. Give me a moment, please. If I'm not mistaken, but it would be, how much was it now? Damn. Adjusted EBITDA, 5.3%. that's the full year, and the full year is 6.5, yeah, so let's say roughly 7%. So before, expectation was roughly 8%, if I'm not mistaken. So I think a high single-digit number was the target, and now it's 6.5%. So still a mid-range single-digit gross margin. However, definitely lower, and definitely something what I need to color as well negative. And the same, of course, same with the adjusted EBITDA. I mean, expected from my perspective, just calculating with those high digit number, which I used 8%, which I thought was fair, would be 9 million adjusted EBITDA and 8% EBITDA margin. And now it's 5.5 million euros and roughly 5% adjusted EBITDA margin. Yeah. So again, a bummer, again negative, crazy. So as well, both negative. It's really unfortunate, man, because I really have high hopes for this company still somehow. Yeah, still somehow I have, because again in Europe, renewable energies is kind of a big thing. Yes, it's not that focused anymore like a few years ago, but I assume it's something where money floats in, subsidies, funding programs, this kind of stuff. And Alfen, I think, is not that bad positioned, yeah, as well, with a quite local good market with the Dutch, with the market, with the Netherlands itself. Actually, it's good, close to Germany, very very good market, strongest market in Europe, basically. Yeah. Scandinavia, not that far away, not that far away at least. And yeah, so however, it seems to be very tricky, and so profit actually as well, straight negative. Yeah. And honestly, guys, I mean, just the current results, that would be not that nice, yeah. For sure, not compelling, convincing whatsoever. But what really hit me strong, honestly, as an investor, and it was already ranked as my least favorite position, on position 6 out of 6 stocks I am a shareholder of. And yeah, this holding, I had deep and strong struggle in the past. You know it, if you followed me through my live earnings. And even though this was the case, I even purchased further shares a few months ago, and even 1 or 2 months ago. And yeah, because of now the guidance adjustment, and even that on both sides, profit and revenue, and even that the solid legacy business, the substation business, somehow is struggling. EV chargers somehow is struggling. I still have hopes for this company. You know, that's I don't want to say any different here, but the truth is that for me at least, there are other good companies out there. Yeah, and I don't need to be invested in Europe. That was my pick for Europe. That was my pick for the renewable energy sector. That was my pick for this market, which I'm somehow think as for sure potential. But it might be a difficult business case for the players who have been active there as well. A lot of manufacturers of wind turbines, they struggled in the past to make profit, like Vestas, Nordex, this kind of stuff. Others as well, operators, it simply doesn't seem to be a heavily easy business. Yeah, it can be for sure a profitable one, but somehow not for everyone. And maybe it's the case that renewable energy is the future, but you need to separate it from your investment case sometimes, maybe at least, and that the result of this is that renewable energy can be the future, but the companies who are publicly traded as shares might not be the big participants by this revolution. Yeah, might be the case. So. And that might be as well my learning, honestly. And but we, on the other hand, we should not forget it's a very cyclical, cyclical. Is this correct wording? Business. So, which means it really depends on the overall development of the economical numbers, macroeconomical numbers, and circumstances. And so, I mean, if more and more money is floating in, renewable products working out well, this stuff can go very, very well, you know. It's in terms of EV chargers very strong related to the sales of EVs, you know, of cars basically. But because of this cyclical impactness, yeah, or parameters, yeah, who knows when it will come back in strong power. Maybe it's now one of the last bad earnings experiences, but maybe not. It's very hard to say. Even though, again, if I have high hopes, yeah. But this is this so far, and let's quickly cover as well 3 other aspects I want to share. To give a little bit more color to it. And what we can see here is the energy storage backlog. Yeah, and we have here what I've prepared is the energy storage backlog for 2025 and for 2026, because this is how they, I can share it with you. This is how they share it as well. Here you can see it. So 2025 backlog, 2026 backlog, and you can see the 2025 backlog decreased a bit. Kind of reasonable maybe, because first quarter is already done, and so they're utilizing what they have to realize projects, and so therefore backlog is decreasing. So the reduction makes sense actually, I think. But what you can see here, that's the 2026 backlog, and this is not increasing that heavily, definitely under my expectations. And yes, they're noting, I mean, they just won the second largest battery product in the Netherlands, and it's really large. I think it has kind of, what was it, a turnover, a project budget of something like 80 or 90 million euros. A big part of it will be covered by Alfen, I expect. So yes, this will get a strong push afterwards. Would not surprise me if it would go to something like, let's say, 100 million euros overall. Let's say a little bit less, maybe 80, 85. I can imagine it's 85, something like this, or even a bit more, but 85 I could think about. I'd say 80 to 100. So I would not worry that much in this regard. However, you can see how 50 million. Nick Kemkes, hi, very glad to join, that you used the chat. And you say 50 million is the order. I'm not sure, I will go later through the sheet and hopefully they stated somewhere, but yes, I trust you, so that helps definitely. So we're talking about overall, thank you very much, we're talking overall about a backlog now of 73 million euros for 2026, but you can see here as well, yes, how strongly the backlog and the sales can be positively affected, but as well on a negative direction. Yeah, that is what we should not forget. And let's see if there are other big projects which will come in this regard. But yeah, not 100% weak. I mean, 73 million. It's more or less on the same level what we had last year for this year, when really the backlog was already full. So I assume there is a good chance that in 2026 they will reach higher lows, let's say it like this, higher lows than in the past. Again, the target was 111 million till today's guidance correction. but 111 million was the guidance in terms of energy storage backlog results, full year revenue results for 2025, and 75 is not bad, so I assume they can make it happen. Just give me a moment. What they've achieved overall last year was 124. Yeah, let's see if they can make a beat happen. Nah, I don't think so. But at least it is something in the pipeline, let's say it like this, even though it's not that convincing. And yes, basically what is displayed here on their sheet, I've transformed into my Excel sheet. And originally, guys, maybe it was a bad assumption or target from my perspective, but I want to see for 2025 something like almost 100 million euros. To what was really a bad idea, I assume. What was really dumb, I think. Yeah, I need to be honest, because you can see now with the 86, I honestly expected, I wanted that they cover somehow the full year target. That was a wrong thought, basically. Because again, you can see with this 86 million right now for this year as a backlog, they're covering already 77%. So, and with 21 million, let's add this to the number. We have 96%. So with the 21 already achieved, which, well, you can see here, which means basically that I assume they will reach the target for this year. Maybe a small decline, because even though if they win now projects, it's, I assume, not that likely that they can realize them this year, which means that when really the revenue hits in and takes place, will get postponed to the next year. That's how these backlogs, this kind of backlogs, getting created. Yeah. However, 86 million is the reality. A bit lower than I would like to see, but I think it's okay if reflected correctly. And so therefore, in terms of this backlog, I give it as well an okay neutral rating. I think that's fair. And 2026, here, yes, again, I mean, that would be the number if Nick Kempkes here out of the chat is correct. We can check it out later together. If they state somewhere the exact backlog affected by this. However, then it would look way better. But we need to right now basically rate the backlog. This is how we work, or this is at least how I work. And again, I wanted to see something like 39 million, so that a way larger number is covered already. Actually, I'm not sure how I calculated it anymore, but I know I tried to create kind of a ladder till 100% till end of 2025 for 2026. That was my target in terms of the backlog, even though it don't have to be 100%. And again, 39 might be a bit too high, but 23 from my perspective, is definitely too low. Even though if we consider the large project, because again, I will consider it in the next quarter if I will do a live earnings call. Let's see how my relationship to this company will develop in the next weeks, and maybe I sleep one night over it and come back to the company. Let's see. But again, as I mentioned, I sold right in advance of this call. However, for this, even though there's this big project, I will now consider only the actual backlog for at end of first quarter 2025, and that is not convincing me, and so that's as well a negative rating. However, if we do a blend, and if we consider that 86 is definitely not bad, and energy storage somehow recovering, and we have some kind of hope in our back of our mind, in our memory, I would say I have a tendency to neutral, and that is fine, and I think at least, that is fine so far. Okay, Okay, it is okay, let's say it like this. One moment, Nick Kempkes is using the chat. I'm really curious if tomorrow the shareholders look more to 2026 instead of 2025. There was such a big sell off already and it is still a cheap stock with a good chance of going up with changes in law. I made a rough calculation in ChatGPT about the order with these systems. It should be around 50. Yeah, okay. It might be the case. I checked some article where they've stated how much the overall revenue of the project was, the battery system, what was the budget or the tender or something like this. And I think it was actually something like, if I'm not mistaken, 86 million or something like this. And I thought, okay, they will not cover all of those budget. Yeah, you know, there are some other companies who doing services, planning services, realization services, legal services, some parts which they add, for instance, cables or whatsoever, not sure, but I assume Alfen will not cover everything, and 50 million might be realistic, yeah, so I'm trusting you. Yeah, and regarding the aspect of the shareholders, if they take a higher focus on 2026 or 2025, I'm not sure what is the sell-off. Give me just a quick moment. I can't share my, sorry, but I quickly log into my account to check out what is the current price, at least what I can see here. And I hope it's working. Just give me a moment, please, so I have a better idea of it. If I'm not mistaken, it already recovered a bit. So I sold very likely at not the best price. I think I sold at something like, if this price is up to date, and I think it is, it looks like 10.5% minus, and I think I sold it at something like 14% minus. Yeah, so it recovered already a bit. Let's see what will be the information as well tomorrow, which gets communicated by the management. But I think it's just a difficult story. And yes, Nick, you are completely right. The question is what kind of story the shareholders set the focus on, and as well the analysts. Yeah, but yes, and it is cheap, and there is kind of a floor what they've already reached. Let's see here what is going on, and I mean it's very clear, you know, that they reached this kind of floor in the past months and quarters after this heavy drop in the mid of 2024. But for me, honestly, it feels kind of like an endless hustle, you know, like really there's always a new story, always a new reason and excuse why they didn't achieve something, and it's really crazy. I mean, we have last year with the substation this moisture stuff, and that the supplier couldn't provide the concrete houses for the substations, and this and that and blah, and you know, and for me again, it is not just about the results. For me as well, it's a lot about the management. That is what I've learned, especially in the past 1.5 years as an investor, I would say. That you need a management what you can trust in, and a lot of times, therefore we can go back to the Excel sheet, they guided not that well. And again, yes, outlooks are sometimes difficult to set up, but that is in a lot of industries the case. Yeah, a lot of industries, and that is already a sign for me how well they are and how they argue and this kind of stuff. And there are things which, for instance, they rolled out a DC charger. They developed a DC charger, promoted it on live events as well, on fairs, this kind of stuff on their website. Finally, not an AC charger, but a DC charger. And then it was in advance, I think, of the last earnings release, it was missing basically. For what is going on, guys, some kind of EV charger solution. The newest one actually is not here anymore. So they removed it. They thought, okay, it's not fitting anymore, and we figured out the market potential might be not that great, and there are companies who likely are more focused on this DC stuff and competition too high and whatsoever. I have no clue what is actually the reason, yeah. But somehow the potential is not anymore there. And I think that's so crazy that you develop something and it seems for me that they didn't do their homework right. That was my assumption, because, or at least, was for me the extract, because I really thought, how can you just develop something? I mean, not sure how long they developed it, but I think I expected that didn't take longer than 3 years, 2 years. I have no clue. But however, I think they should anticipate this kind of development, and you can screen the market, you can see what is going on, and then you even release it. I mean, you develop it, you pitch it, launch the product, and after 1 quarter or whatsoever, you take it back. And I mean, as well, in this kind of solutions, there have been hopes involved as well from the investors. And that is something where I really think, okay, your supplier can have issues with concrete, that's fine. You might grow too strongly in the past, and you are covering and are present in a lot of regions and countries where you had hopes, but now it just costs money because business not starting as expected. All of this can happen. That is not something what I take negative on the management, but what I really didn't like is this aspect that they really develop it, launch it, 1 month later, 1 quarter later, it's not existing anymore. Crazy. And I mean, as well, think about your sales managers, your sales staff, and people who are involved. They get trained for this kind of solutions, to install them, to maintain them, to sell them, and all of this, and you really think, okay, what is this kind of move from the management? That's just my perspective, guys. Yeah, again, that's no financial advice or whatsoever, and we're talking here about business. It's not just about a stock, it's not about a public traded company. It's really real business, real people are active for it. And so again, there have been my doubts with the management, and as well of a lot of changes in their guidances and what they have stated and kind of excuses. And I mean, you need to feel comfortable with the company you're investing in and with the management. You need to trust them, because actually you are not steering the boat, they are steering the boat. It's good that they're steering it, because I could never do this actually. Should not sound like this. But the truth is as well, if you lose trust in the management, and I lost it already in the past quarters a bit, but I had somehow some kind of hopes, because I liked really the saving program, the restructuring program of the company, reducing the personal staff, setting a higher focus on certain levels. And again, it still might work out. I don't want to say there's no chance or whatsoever. But I personally just lost kind of trust in this regard. And that is difficult for me. But again, maybe I need to sleep a night over it and think a bit about it and come back to the stock. Let's see. And what I want to show is, again, that is something why I thought, okay, what is going on? Why they guide so awkward? You can see in 2021, guidance was 240 roughly, and result was 250. Okay. That's not that bad. A small beat is a small beat. That's very regular. But then 2022, and yes, there are some corona effects, some funding programs whatsoever. But again, it's 350 million was the guidance. Result was 440. 2023, 570 million was the guidance. Result was 500 roughly. Last year actually quite accurate with 485 and 488. And now they already adjusted the guidance. I think that's honest and that's fair that they're doing this. But again, it's a bit tricky. Nick, you were mentioning something, such a long roller coaster. What do you feel about the 80% reduction cost? I checked on LinkedIn, the amount of people working at Alfen decreased with 9% the last 8 months. yeah, nice that you are so close to the company. First of all, it seems really like you're doing your homework right. You're using ChatGPT for figuring out what is going on with the project budget and the expected sales which take place for Alfen. I like this very much, and as well that you taking care of this cost reduction. Yeah, I like it very much. I really like the cost reduction program. I like all of this. I like this focus they set on Scandinavia, on Germany, Belgium, Netherlands. I like this very much. France. I think that's very good to do this. Yeah, to make sure to do the things right and not doing too many things, but on the other hand, not doing them well. Yeah, and that was, I think, the case in the past quarters. And you never know. I mean, if macroeconomic numbers would run out different, then it would be great maybe that they covered so many markets and had huge potential. But this wasn't the case. And so, yeah, I think with 80% cost reduction in terms of operational and stuff, I think it's great. It's actually a very strong achievement. Yeah, for sure. And yes, as you mentioned, staff is only one part of the story with 9% lower staff overall. So, yeah, so I already shared, I think, why I'm not that heavy convinced anymore by the management, even though it might be not that easy. So any storage backlog, I rated it neutral with a negative tendency, let's say it like this. And now we come to the gross margins, and I already entered them as well. And you can see, yes, they are, if I'm not mistaken, in all cases better than past year actually. Yeah, so 30% overall gross margin, adjusted gross margin, of course. That's okay. I mean, I read some targets in the past which have been a bit higher, as you can see here, stated by the management as well. I'm not sure at which report they stated it, but I copied it in the past. And so I want to see them sooner or later, I think, in best case, when they recover, when the rehab was successfully executed. And it looks like, again, they are improving a bit. Yeah, I mean, it's just reasonable that this is the case, I think. And so I would say that this is actually a bit surprising and positive on all levels, from my perspective at least. And so I like to really give this adjusted gross margin a green rating. Yeah, I need to be fair here as well, I think. And I rated green, I need it positive. Yeah. And now we have, so something good, definitely something good. We have an energy storage backlog, which is okay, especially when we consider the large project for 2026. We have adjusted gross margin, which are, from my perspective, good actually. Not sure if I missed something. And yeah, energy storage in general is a bit like recovering, it seems. But really the worst thing is that always, I mean, let's say 2 years ago, EV chargers somehow start to decrease, you know, all these funding programs have been shut down in Europe. And people not buying that much EVs anymore, and the focus were somewhere else in life. Yeah, all good. So that dropped. Then substations somehow jump in and covered it a bit. And of course, energy storage solutions, the rising star. Then energy storage solutions had trouble, and substations as well. Yeah, and now you thought, okay, 2024 is the past. Now we are in the present and take focus the future. And now substations will work out very, very well this year. And again, here another bummer, another negative experience with this 54 million euros revenue. Yeah, and same with EV chargers, which is even stronger, somehow a decline. And again, it's the, as you can see here as well in the table, the high gross margin business, yeah, and that's especially unfortunate, let's say it like this, and has of course a huge impact as well on the adjusted EBITDA for the full year. And yeah, however, but energy storage systems overall, with the backlog and with the actual achieved revenue, is okay. It's really okay. Gross margin is okay overall, but overall top and bottom line growth, so revenue and profit, especially with the adjustment of the guidance, doesn't look that well. Yeah, and yeah, okay. However, and I would say we have one more, and that's the midterm objective. And I just superficially screened the results and the outlook, if there's anything stated in regard of the midterm objectives 2027. And you can see 2024 there have been 1 billion euros in 2027, if I'm not mistaken, and roughly 18% adjusted EBITDA margin, and capex lower than 5%, and only the capex, because they reduced the costs, is still existing or even was improved. But now they're just talking about revenue growth 8% year on year till 2027. So they didn't adjust it. So I think they have hopes for 2026 and 2027, and I think that's reasonable. There's still plenty of days left. And time left to come to those levels, and low double-digit EBITDA margins, and I think they didn't adjust it at all, this result, so we keep them. So far we keep them neutral, because at least there no negative impact on it. So it's not positive, it's not negative, it's just neutral. We recognized it, let's say like this. Nick is writing a little bit more in the chat. I noticed a trend recently that companies are switching to 100% EV car parks. Where I work, they are going to switch as well. This is in IT, so at the front line of tech. Quite interesting. Yes, it is actually. My former employer, my former company I was active for, they had as well already a German mid-range, mid-size, mid-cap industry company, machinery company, let's say like this, and as well more or less the full car park, especially in terms of the sales managers, have been Teslas. Yeah, so, and it might be as well very interesting, because yes, you are completely right, and they are the perfect customer segment, target customer segment for Alfen. Yeah, because they're using the portfolio. I mean, for private owners, I assume there are good solutions as well from other companies, cheaper ones. For highways, they are not developing or providing any solutions. Alfen, really core business, I think, is really like cities, like public tenders, public agreements, public sales, and of course companies. Yeah, so it might be an interesting business, but again, this is something what I've already mentioned, Nick, that the big question, and that makes it so crispy and interesting, this investment, this business overall, especially in Europe. Even though they're doing all of this, they're rolling out and transforming their car parks from combustion engine to EVs, and using batteries for some renewable projects like solar farms, and all of this is going on, and a lot of substations to make more stable the grid, the local grid. The big question is, how strong can Alfen participate? How strong is the competition, especially in terms of EV chargers? I assume there is some competition, especially from Asian companies. That's the same for me in the energy storage space. I assume that it might be quite simple, I assume at least it might be quite simple to provide solutions as a more foreign exotic company. And so I think which is the only product line which is well protected, I think, is substations. At least that is my take on this. And so even when it's the case that EVs getting rolled out heavily, it might be the case that often basically not installing for those companies who are transforming their car parks, they are not installing the EV chargers. Maybe they do, maybe not. Yeah, and you're 100% right. right? Still EV lasts forever, so saturated is saturated and easy for competition to join. 100%, yeah, 100%. I mean, for me, always I like this rising star in terms of the energy storage systems. I like substations business very much, and yes, EV chargers can be very interesting as well, but already when you check, for instance, from the private perspective, you check out on YouTube or when you Google some comparisons between different kind of EV charging companies, a lot of times I don't even see EV chargers from Alfen, because I think in the private sector, even though they sell them there, the demand addressed to Alfen is just not that strong. I assume they are a little bit maybe too premium for a regular customer. I don't think they have bad quality or something like this, but I assume, or when I think about it, it might be the case that it's a bit too premium, too costly, especially when you compare it to produce them on a high volume base in, again, Asia, for instance, and ship them to Europe, and you can sell them on a volume base quite easily. So I think competition is definitely a big risk. And I mean, other companies as well. I'm not sure which company, but another big one, I think they sold the full EV charger product line to another company because it simply was not working well. Or even they closed it, I'm not sure, but something I've read, I think in Q4 last year. And I was a bit more proud of Alfen because I thought, okay, they survived, they have a nice product mix, and because of this, they will survive this kind of storms. And after the conditions getting better, the sales getting improve even more better. So, however, I would say, guys, let's jump into, maybe check if the price, you can see here the price, and it's roughly 13%, so again a bit lower than a moment ago. However, I would say we go back to the report. I mean, again, my verdict is already almost fixed. Let's see. Maybe I see some information which somehow convincing me, and I live purchase back my shares. I don't expect this will be the case, but however, I give it at least a chance. But the overall verdict, to make it official, again, you can see revenue red, profit is red, midterm objectives, okay, is neutral, but that's just something which is okay. Gross margin is green, okay. That is, the backlog is neutral. So overall, this is a mix out of neutral with neutral and positive, but which counts way more is the actual results, and even more for me the guidance and the outlook, and that is just really impacting everything which is okay here negatively, and therefore I have no other chance to rate it negative. Definitely not. That's quite easy call for me. I had definitely more difficult cases in the past. Okay, so let's go a bit through the results. The first page we already covered, but here they state something regarding this big project. Or let's start with this. Energy transition delays continue to impact our business lines, smart grid solutions, so substations, by grid congestion, face labor shortages. You see so many reasons. And I mean, that don't have to be bad excuses. Maybe that's just the reality, but you can see, I mean, all of this can transform as well into positive drivers for different product lines. But you can see how many risks out of nowhere in this kind of business can happen, can exist, and that's a mess for the management to steer during this kind of periods. It's very cyclical, very difficult, challenging. Don't want to change shares with the management board. I can only say it, yeah. But you can see a lot of different reasons. Then we're talking about energy storage systems, and they have this big deal, and I mean that as well has an impact on the guidance for their revenue. But we will talk about this in a moment. And here, yeah, that is already covered. So we go in with the substations and covered already the revenue. Grid operators. Yeah, you can see really the big ones like Tenet, they're really making the game with 71%. I think they already mentioned past quarter that private domain might be a bit difficult at the moment, so that's not that surprising. But yeah, again, something what was not on the very likely on the minds of investors, or at least of a lot of them, in Q3 2024. So again, something kind of new. And lower order quantities is the phase installation regulatory capacity. Okay, we had this already. Produce in the Netherlands. Yeah, and I think they want to produce, what was it? I think 100 substations per week. Is it correctly? If I'm not mistaken. And now I think they ramped up the production to 100%. So which means those 100 per week, if I'm not mistaken. Not sure if we need to deduct somehow feast days or something like this, so days off. However, we have 900, let's say, month consists out of, let's say, make it easy, 4 weeks. So 12 weeks overall, and this seems already, I mean, it would be 1,200, basically 1,200 or 1,200 substations, and now it's 945. So they are already behind a bit, if I'm not mistaken. Okay, and you can see they're even producing some of them in Finland. And it's nice that they keep this local and take care of the quality. With many factors that need to be in place. Yeah, that's something. I mean, just if Alfen would be just a grid business, just about substations, it might already be a very attractive investment. I mean, I like this diversification through batteries and EV chargers. I like this very much. That's one reason why I invested in this company. Yeah, again, but just substation business seems to be very attractive with this outlook, with this perspective that many of the grid operators need so much updates in terms of the grids. How you can see a lot of requirements are required, yeah. Obtaining necessary permits. And permits, if it's like in Germany, I can say it can be a grind to get these kind of permits, make them happen and receive an approval. Yeah, so you can see there are a lot of different aspects which unfortunately Alfen don't has an impact on, but which need to be in good shape to really roll out their perfect performance in terms of substations. Yeah. Okay, let's take a look on the details of EV chargers. I think actually they changed one more time the color of everything, because now it's like in my Excel sheet, and I think last quarter it was, look, that is as well where I get headaches. I don't want to be too accurate and negative in this regard. I don't think it's nice, yeah. But here Smart Grid Solutions was yellow, EV chargers was blue, and battery was green. Completely different. Now you see EV chargers again green like in the past, and it's really for me it's kind of annoying, and I sometimes think as well, what is going on, guys? And sometimes they start to state, in the past I think they started sometimes with battery storage systems or something like this. They had a certain order and then changed it, always which is working the best. They start with the highlights. I understand it kind of, but it seems for me as well like it's not really transparent. I think they should always use the same colors. They should always use the same order and start with whatever, substations, EV chargers, battery storage systems. So nobody gets confused and all this kind of stuff. You don't get the feeling that they try to hide something. And no negative on this management for sure, But yeah, I sometimes get really headaches by this. Nix is writing something. The back deal last month might be a great indicator for great things coming. Companies are actively investing in this tech. More of these, and the stock is safe. Gambling. Yeah, you're true. But yes, well, you can check it out by yourself. They won the second largest one, and actually not sure if they joined the tender, but they didn't win the largest one, which as well was decided a few weeks ago. And I think again this one had the second largest one, battery project, had I think a size of 80-90 million euros, and the largest one I think had, I need to check it out, but I think 350 million. So really a different story, different story. And I think this one was won by Tesla. And you can see there, okay, even this market is very competitive. Yeah, Tesla is present here with their mega battery packs. I have no clue how they state it, but yeah, they are definitely present in the market, not like just in the US or South America or something like this. They are present right here, right in the Dutch market, for instance. And so they are likely very competitive for the large projects. And then there are companies which might be more focused on the small ones, or at least which reaching their yearly targets with just covering a few small projects. And now Alfen is on this mid-sized projects focused, and might be difficult a bit because you're just somehow swimming between those both layers, and the separation is not always that clear, and sometimes I assume, so I'm as well convinced by the technology for sure, and I'm convinced that Alfen is providing good solutions. Otherwise, they would not win this kind of tenders like the second largest one, or the other one, Oosterschelde Kering, what they won a wind farm in the southwest of Netherlands. But you're right. It's a gamble. It's kind of a gamble. The positive one might work out. Okay, let's see what is going on here. So EV chargers, and that is what I've already mentioned with the private sector, increasing competition in the home segment, as well as temporary dip in charge point deliveries in public segment. Look then, not only just home segment, but as well the public segment somehow is confronted with challenges. That is what I've mentioned, that so many different causes, and it's not just okay they have some issues with substations or whatever, or had it in the past and now they recover and then it's good and we take positive in the future. No, that is again kind of uncertainty which gets spread across the investors, and I expect that analysts don't like this at all. Yes, again, if macroeconomics change, if the here I have it open for you guys, if the interest rate keeps dropping, and so a lot of projects, a lot of customers have running businesses with financial high sensitive projects, high budgets, high leverage, so a lot of debt money getting used, and if the interest rate lowers, these kind of companies realize more projects, at least the chances are higher that they realize them. And of course, private persons like you and me who might be interested to purchase a new car, think about buying an EV earlier than expected, and then you need a charger. All of this might take place, but again, they need to participate, and it's already dropping, and somehow so far it seems to be struggling. It's just very challenging. Netherlands, 68% revenue was generated outside of the Netherlands. Most EV charge points were sold in Netherlands, followed by Belgium and Germany. Yeah, that's nice to see at least that they are somehow diversified. Way less chargers compared to last year, but only 30. Oh no, more. Okay. So you can see, I mean, compared to past quarter, in terms of revenue, declined by 27%, but actually the number of charge points which have been produced, and I think as well kind of sold, even dropped higher with 35%. So I think they lowered a bit the price, even though the margin looks good with 39%. Yes, lower than past year, but still solid. However, it's not just that it's not just that the revenue is lower, even more lower is the number of produced products, and that already shows that they and sold products likely, and that shows that the competition increases really. They're lowering the prices very likely. That's the reason for this gap between 35% and 27%, at least from my perspective. And as well as something I don't like to see. You know, there is already some price war going on with the batteries very likely. There's some price war going on with the EV chargers. And yeah, luckily no substations price war, but it seems like the demand is missing a bit currently. Yeah. Okay, let's go on and take a look. EVC Alfen to strengthen market position with the new V2G ready double plus and single plus charger to be launched in the fourth quarter. With broad range of vehicle brands and energy systems and smart charging points, as well as enabling optimization for self-consumption of locally generated solar energy for home and building owners. Yeah, so a little bit more sophisticated solutions even on the lower end of their portfolio, I assume. So nice that they're developing it and they're setting new standards. That is nice to see. But again, the question is, how price sensitive is the market? Again, if there's big subsidies, big funding programs for private homeowners, for instance, I assume it's not about a few euros more or less. But as long as you need to cover primarily the costs of those chargers as a private person, for instance, I think you are very price sensitive. And if they more or less developing all the same experience, and I assume it's not like a few years ago when like companies like Alfen had a head start, they had more sophisticated, more advanced developed solutions. I think they could really they had their strong USPs, and it was, I assume it was reasonable to go for Alfen solutions for reliability reasons and yeah, this kind of stuff. But I assume now over the time other companies, they offering as well acceptable solutions at least. And even though if they are just acceptable and Alfen is premium, and you think it's very nice that they have a local service infrastructure and they are from the Netherlands and you know all of this and not from Asia or whatsoever, so you want to bit support your local player. All of this is fine, but the question is really how much you want to pay for this. And on a certain level of price difference, it might be not an argument anymore, the quality, this kind of stuff, because at the end you just want to charge your car. At least I say you just want. Maybe it's very tricky, but yeah. But you can see here is some QR code stuff. Okay. Now we come to the energy storage systems. So just 3 bullet points actually. And again, from my perspective, that was quite compelling. Yeah, we can see here the anticipated decline is explained by the 40% price decline for battery systems during 2024, which is now impacting revenue. Yeah, so heavy competition going on. Gross margin 32.5% in Q1 compared to, looks good, but again, one-off effect. Whatever this kind of one-off effect is, I assume if you tomorrow morning when the earnings call takes place, I assume someone will ask them what is this kind of one-off effect, if they not mention it already by their own, the management. Yeah, we have this backlog, we already discussed this. Backlog 2025 covers this year's revenue outlook, 105 to 118. Okay, that is nice to see, at least. That is nice to see. That 2025 looks good. Yeah, it's actually even a bit higher. So it's not sure if that's the number after the first quarter. Yeah, it must be, because yeah, okay. Oh good. Don't get confused, guys. Okay, we covered it already. Here we can see the big project. The new 100 megawatt, 200 megawatt hour system will be the second largest energy storage project in the Netherlands and the largest project for Alfen today. Alfen system will provide essential reserve capacity. Yeah, out of this is nice. It's expected to be operational by the end of 2026, contributing mostly to Alfen's 2026 revenue. Yeah, if it's something like 50 million, that makes sense. This is the third major battery energy storage system installation in the 4-year partnership between Return and Alfen. And yeah, this is nice as well, but as I always is, but I don't want to use this word that much. But here another aspect, I mean, the question is, the Dutch market, okay, they won these big projects in the Dutch market, obviously. I'm not sure how large the projects outside of the Netherlands are, but I assume the largest ones, at least the largest one for sure, will get realized in the Netherlands. And the question is, how many of those large projects are existing? Yeah? I assume there are definitely several of them. I would not underestimate it, but there are definitely several of them, but somehow you need to catch them. Yeah, you need to catch them at the end, because it's not an unlimited number of projects and potential in this size, for sure not. I think in Europe, maybe they get developed more and more in the future. But again, the larger these projects are, the more heavy the competition will run out. And sounds good, and you think, oh, hopefully they can make a few more of them happen in the future. But let's see. Maybe tomorrow in the earnings call, some analysts will ask what is going on with the pipeline. Are there further projects, maybe even outside of the Netherlands, where they expect to make the decision will be made at the tender, and they even might win it, what they expect. But we will see. Okay, however, let's check out the financials just very superficially. Revenue we already covered. So definitely the lowest in the past 5 quarters. Revenue growth, not that bad like Q3, but still with minus 11%, not convincing. And again, it's not the big issue. It's more about the details, actually, I would say. Gross margin somehow looked well for me. I'm not sure. It's kind of a seasonality. For which reason and whatever, I have no clue. But it's nice to see that's recovering, and 30%, that's actually positive from my perspective. But however, you can see at the end what is left at adjusted EBITDA margin, 5.3%. Not really completely a knockout, but as well not convincing, and you would hope for higher results basically. More again, like as I mentioned, 8%, something like this would be nice, like the higher single-digit rate. Mainly driven by lower revenue in EV charging and storage systems. The good thing is, energy storage systems is lower than, or is getting decreased compared to the first quarter 2024. Let's check this out if that's actually the case. Yeah, a bit lower. Because I thought, okay, I know that battery storage systems is regularly the low margin business, and then it would balance out a bit the low sales of EV chargers with the high margin, and the energy storage systems with the low margin would balance out each other a bit, but it's not a big impact by the energy storage systems. Yeah, it's really EV chargers are hitting in here. And again, EV chargers, they can deleverage effect due to lower revenue as well as revenue shift from EV charge to smart. Cash flow was 200,000 euros. Positive cash flow, at least something. Okay, let's take a look at the cost savings program. Cost savings have been successful. Minus 18.2% cost reduction in personnel and other costs between Q4 24 and Q1 25. And I mean, that is good. I mean, I think there was a certain period of time in the past year where really people thought they will maybe run out of financial power and might been forced to stop some product lines completely because they are not profitable and whatsoever. They need to save even more costs or whatever, what kind of effect could take place. And I think that is at least not looking for me like this anymore right now. Let's see how the development goes on with all the sales, the demand and this kind of stuff. But I mean, again, they have a positive adjusted EBITDA, they have a good gross margin, they have at least kind of a positive cash flow, very close call, but they have one. So that is actually nice to see. And it doesn't look, for me at least right now, let's see how everything develops. But under the current numbers and under the current circumstances, it seems like they can persist with their business. Yeah. And we can see here other costs, personal costs. So other costs minus 1 million compared to 1 year ago. But personal costs, so stuff which they have lowered, really 4 million. So overall 5 million lower, roughly 5 million. That's nice to see. Operating costs have been declined as well by 16.6%. Yeah, I think that's really good, honestly. That is my position from my perspective, very, very good. And I can expect actually, or I would not be surprised if they even further lower a bit the costs and really running into a good routine in terms of their spending behavior. So as well, I mean, I assume they can't just cut down markets completely that quickly, and I assume they cut down some kind of markets. So as well, that has a big impact on the operating costs. And I need something to. Just give me a moment. Sorry, guys. I hope it's not too noisy for you. I'm a little bit allergic to flowers and this pollen stuff, so I'm fortunately not sick, but I need to take care of it. But however, I think for me really that they're stating it as successful, that's cost savings program. I think for me I would share this definitely. That's something positive. And it's something actually as well on the long term or in the midterm which can have a nice impact on it. So really they can start in the future to print some money and being profitable on a higher level, on a higher scale. The fundamentals existing, if I understand correctly. And now we take a look at the outlook. And I think that was really, which hit me more or less as well quite strongly, because you can see adjustment of revenue, bandwidth, and just EBITDA. You can see the adjustment of the guidance of the outlook. They lowered it. Okay, already talked about it. Can tickle this box. Then smart grid solutions revenue range adjusted to this constraints. And you can see that. And again, a lot of times the grid operators, you have seen some statements that they will purchase more. They need this, they need that. But as you have seen in the presentation before, there are aspects and there are challenges as well they are confronted with. And so, even though if there is a need, there is demand for further, grid solution substations, it's just limited adding value if... Okay, sorry. not only my Alfen heart is broken as well, now my nose. That's not good. That's not good. Yeah, but you again, even if there is a demand for all the substations and the grids need to get updated and adjusted, if they're not rolling out that quickly, those projects, it's hitting somehow Alfen. That's the case. You can see old range actually a growth, and now it's a decline. That is, I mean, substation is really the solid rock in the shore area, if you want to say it like this. It's really like the reliable product line, and now struggling. On the EV charging revenue decline range adjusted. I mean, again, they will sell. I assume that all of the grid solutions which not getting purchased and shipped and installed now, they will get shipped in the future. I think the grid operators, they need to cover the demand. They need to update their grids. There's no other option. But the question is when and how good Alfen will participate. I have high hopes in terms of substations, but it's for an investor, I think, definitely tricky if this takes place just early in 2027 or something like this, or 2028 or whatsoever. You can, I mean, what is another opportunity? What is the alternative? You can invest in another company and might use this time in between. However, EV charging to softened car OEM CO2 targets, yeah, so they are the car manufacturers, especially I think in Europe, they don't need to roll out that heavily the EV sales and improve them to those targets, which are connected as well with fees if you don't reach them, and yeah, increased competition. So again, two impact factors which actually increasing the decline from 5 till 10% to 10 till 15% for the full year. Again, lower than the first quarter. Again, first quarter was 26%, so they expect EV charging sales will ramp up positively in the next quarters, but still a negative adjustment. And energy storage systems revenue decline range adjusted due to favorable 2025 backlog developments. And that's actually nice to see. I mean, look guys, if that's really the case, I think we should adjust this. I never did this, I think, but in this case, 2025, I need to, I mean, not a big impact on the overall rating, but I will, so I need to mark it green as positive, yeah. So it seems like the backlog is strong, and even seems to be the case that 2026 backlog, considering the second largest project and the largest one for Alfen, has been successfully decided for Alfen. Even both might be green right now. Let's say it like this, and that's good. At least this future perspective is good. Yeah. However, let's go back and take a look on the last numbers. Energy storage systems, yeah, only 0 till 10% decline, and it's very likely that it's an increasement in 2026. Yeah, but let's see. Alfen changes adjusted EBITDA margin guidance to 5 till 8% and will take further cost measures. Before, again, it was high single digit percentage. So I expected something like 8%. Now it's 5 till 8%. So the midpoint is 6.5%. And they will take further cost measures, which sounds like they try to improve and might be very good for, I assume, 2026. But again, that they will reduce further the costs, might be as well an indicator that they really see that they still have too much stuff, they still have too many whatever partners and running costs which are existing, and they still need to lower it. And yeah, better would be that, okay, they don't need to reduce the cost further. So the better message would be if they would state, okay guys, we reached now a cost reduction level of this 18% and we feel very fine with it, and now demand is perfectly fitting to our cost level, and for us we somehow achieved a successful level. But yeah, I assume they still need to somehow counter this low demand and therefore resources and capacities which they're actually not utilizing. And now we have here the capex guidance remains at below 4% of revenue. Yeah, at least something like this is positive. I mean, again, they will cut down costs even in the future. And yeah, that is as well something okay. Alright, well, let's see what is going on with the price. Is it up to date? Yeah, it seems like it's after market price after closing, and minus 12%. Yeah, so yeah, again, I've sold already my shares of it. Need to be transparent here because I'm not sure. I wasn't in panic, and I'm still not in panic. All good. And my last purchased stocks, purchased shares are definitely in the green. They are positive. They developed well. So it was not, at least not negative, that they hold the company in the past months. It was the right decision. But however, I'm kind of, again, I'm losing a bit trust into the management, into this company, and even more into the overall sector, the renewable energy sector, and to be invested in it. I'm not sure if that's a must you need to be invested in or not. For me, I don't think so. However, what I will do right now is I will eat something after the stream, relax a bit, go to bed, wake up, and maybe during the week, latest at the weekend, I find some time to think about my decision to sell the shares I was holding before, and maybe turn back the decision and purchase further ones. I will see. I will share this as well, for sure, with the community. So you can follow me on YouTube here, or you can subscribe to my Instagram channel. And on both channels, basically, I update about the audience, about all my purchased shares and stocks I'm investing, and other decisions in terms of my investment strategy, and give you monthly updates. So when you take care of those stuff, you know what is going on, and you will figure out first how I've finally decided to act or to go on with Alfen, if there is a future or not. Let's see. I don't want to close the door right now, even though I have sold my shares. But let's see what the future brings. I'm not sure what the future brings in terms of Alfen, but what I can say is, as you can see here, there are a few earnings live streams left actually. So talking about new bank, new holding, digital banking service from Brazil and active as well in Mexico and Colombia, which will get released tomorrow evening Central European time. Well, I think 4 p.m. Eastern time. So I will cover this as well for sure tomorrow. So for those of you who are invested or who are interested into this company, into an emerging market, quite high growth driven company, feel free to join. And on Thursday, I will cover as well live the results of gambling.com. And a bit later, so in roughly 28 days, I will cover Central One cybersecurity out of the US. Let's see what is going on. So far, Alfen was not the best experience, but this is part of being an investor, and actually I'm used to this experience as so far actually loyal Alfen investor, which now has changed. But let's see again if I come back to this bus. Nick, you are appreciating the information. I can only say thank you very much to you as well. It's very nice to interact with you, and it feels way more alive this whole session here. Actually, I never check if someone is watching or not, and I'm just doing my stuff here and sometimes checking the chat, and it's so nice that Nick, you have been active, so highly appreciate this, and thank you very much for the kind wishes. Yeah. For hopefully new, I assume. Let's see as well what the management will communicate from Alfen. Maybe they have really nice information for investors or people who might be interested to invest in it, and that change things. Might be the case. Let's see. I expect a different story. I expect further price drop. Yeah. But as I already mentioned, it dropped already quite heavily. So the question is, where is the floor? Where's the floor? But I honestly would not be surprised. I think we are now roughly 12% negative. I would not be surprised if it even goes to 20%. If the live earnings, if the call doesn't gives any appealing new information, updates about what is going on. Nick, you're very welcome. Appreciate, enjoy, have a great evening as well, and a good rest later on. And guys, again, thank you very much as well to all of you who have joined. It was a pleasure, even though the result, at least from my perspective, was not that satisfying. But again, it's part of the game. And guys, as well, of course, as always, quick disclaimer: no financial advice, no consultation whatsoever, no guarantee for correctness of the provided data. Make sure you make your own decisions. Yeah, again, if you follow my decisions, you would lose no money because of this Alfen experience. So make sure you do your own. Then you can only blame yourself if it's working not that well. But if it's working well, you can be very proud of yourself as well. So that's as well the sunny side of life, guys. But more important than investing in stocks, as always, is staying healthy. So take care of yourself and the ones your beloved ones, basically. And yeah, looking forward speaking to you in the next live earnings streams. All the best and cheers. A sense of capital.